Good morning, folks. Good morning, Pankaj, Sandeep, Ms. Samantha, Garvit. Good morning.
Hey, good morning, guys. Thanks for joining in on a Saturday morning. Can you also put down your where you're joining in from, your location? Yes, Garvit, the priority is to take up questions. So we will wind up the market session in about 20-25 minutes and then go to the live Q&A session. Hi, Sandeep from Bangalore, Anil from Surat. Good morning, Ranjit, joining in from Kerala.
Hello, Ranjit. Hello, Anil, Rajesh, Sumit, Arshia. Good morning. We will take up all the questions in the second half. Hopefully, can take up all the questions that come up. That's our attempt every time. And we will quickly go through a market update and what has happened in the last 1 month, and then take it from there.
Can you please refresh once alone
Which one?
the deck?
Oh, I've taken it off the deck so far. I'll just add it to the stream. Yeah.
Can you please refresh it also once?
Okay. Okay.
Hi Mahanta from Guwahati. Hi Syed from Pakistan. Hi Arshia from Hyderabad. Good morning. Good morning, Piyush. Happy July to you too, Piyush. Hi Vineet. Hi Sudhanshu.
So, quick question
Yep.
for Syed Rizvi from Pakistan. Are you able to invest from Pakistan, or is it through a domestic account that you must be investing through, right? But very nice to see that people are, investing from cross border. That's really good. Hi Rudra, Garvit, Anil, Sudhanshu, Dipank. Good to have all of you here. Sankaran, good morning. We'll wait for just one more minute and then we'll start. Okay, so Sayed Rifi says he practices momentum investing for US stocks. Great. Okay, let's start. So, welcome to all of you. When month of June has gone by, and it's been a great month. We have seen a new all-time high on almost, I can say, all indices that we track, and the Nifty, as we see here, is firmly in a new territory now. This 18,800 mark that we have been hobbing around for most part of June, mid June, has been taken out here, and we've now gone to near 19,200. Now, an all-time high, as I've mentioned several times before, also is an important event to happen. Reason being that the potential of a new rally above a previous high, the probability is high there. You know, whenever the market will come to an all-time high or will challenge the previous high, we'll have two things that will likely happen. Either it will break through, or it will make a double top and start to come back down and then make an attempt later. But the natural propensity, of course, is to go up as the economy improves. So a breakthrough move which may come back and retest the breakthrough and then go up again is the most reassuring thing. So maybe we go up to 19,500 or something like that, come back and retest 19,000 or 18,800, this level, and then go up again. That will be the best move possible if that happens. That you've broken out of a high, but then it comes back, retests, and then it goes up again. That is the best move possible. The worst move possible at this stage is that we've broken out, but this breakout fails. So we just break down below this breakout again. We come down in next 2-3 days. We break down below this, and then we go towards this 200 TMA support, like it happened somewhere. Yeah, I think in earlier part of 2022, where we had a small breakout, but we came back out of this high to make a new attempt again. On the monthly, you can see the month has closed extremely strongly, uh, and it is looking good. Uh, what we can also see in this chart, which is last 6 years of chart, is that there could be instances where you know the monthly candle makes a new all-time high, but you have subsequently a good correction post that. So like this candle here, which was somewhere third quarter of 22, we made a new high, but there was a huge correction post that, going from 18,800 to nearly 16,900, and now we've come back on this. Whereas this kind of breakout, when it happened uh, on this high, it just kept going on and on and on. So there will be breakouts which are very iffy, and then there are breakouts which are very strong and unidirectional. And this is, of course, the yearly chart on Nifty, and you can see we've not had a down year in 8 years now, and which is the eighth year running actually. So since 2016, we've not had a down year. So if you just see this chart on a very sort of global basis, you can see that something has changed after 2008. Yes, there was a rally before 2008 also, massive rally, but corrective moves used to come after every 3-4 years. 3-4 years of run correction, 2 years of run correction, 3-4 years of run correction, 2 years of run correction, and that has reduced and almost stopped now. So there is so much of money flow gushing through. Every central government is printing money, that there is just too much money chasing too few assets, and every drop is chased by money to bring it back up again. I mean, a fall like COVID was fully recovered and went to greater heights within the same year. I mean, that would have been unthinkable a couple of decades back. So we are in a phase where there is no dearth of liquidity in this world, because as soon as liquidity starts to stop, market starts to collapse and governments start to panic, because they feel that they will get blamed for the economic mess, and they will lose the popularity and the public vote, and hence The entire effort is to make everybody feel that they are getting wealthier, although inflation is also eating your wealth in some other way. But let's not get into that. So small caps also after January 2022 made a new high, and this is the kind of breakout that I was saying just now, that it breaks out but breaks down immediately, and then it makes a reattempt again. So it is still very iffy at this point, but once it does go up a few more notches, you will feel more safer here. This is on a weekly basis. You can see that it has been doing a nice inverted sort of HNS, and going up. The rally from 2020 to 2021 was so strong that it has taken year and a half to digest that, and now there is looking like sort of a continuity of the same rally that is going up again. Mid caps are even more extremely robust in terms of chart. Whenever you have a flat line formation like this, and sort of market stabilizing below a line, and then uh, you know uh, breaking out, that is very, very reassuring. It's almost like a flagpole kind of a pattern here that is playing out. The dollar index is something that we have been watching. It is bobbing between these levels. I am waiting for the dollar index to break down. That is my bias towards dollar index to break down, and when that happens, market should get a good fillip from this angle per se. So now quickly let's come to the strategies. Before that, let's look at the indices. So small cap index in the last 1 month has done the best in the entire market at 7.2% up. Mid and small cap 400 index is up 6.8%, so very near to small cap index. Nifty next 50 is up 4.3%. CNX 500 is up 4%. CNX 200 is up 3.6%, and Nifty 50 is up 3%. So 3% is what we've gained on Nifty in this entire month. What you can see here is that small caps, while when you will see from a 10-20 year perspective, so small cap index would not do so much more than the Nifty index, because the small cap index falls dramatically when it does. So to create that additional alpha in your portfolios, you will need to add mid and small caps to your mix of your large caps. But then you also have to make sure that although you've added mid and small caps, it should not become a just a volatile component of your portfolio which just goes up in good markets and comes down equally hard in bad markets, and so that you're not getting that additional alpha out of it. So you need to have mechanisms or strategies where some part of that gain will get retained. So small cap index, if you will see, has not done too much better than Nifty 50 or CNX 500 over 10-20 year period. But if you will see small cap strategies which are able to protect the downside, which are able to generate alpha when the market is going up, they have really gone through the roof over a large period of time. So if you go through some of these strategies, for instance, MI20 is there, which is mid and small cap 400 based strategy of 20 stocks. It has done the best, 16.3% in this last 1 month itself. The index is up 6.8%. MI35 is up 12.3%. This is based on small caps only. So small cap 250 is up 7.2%. MI50 is again a small and mid cap strategy, up 9.4%. MI30, which is based on CNX 500 stocks, is up 8.3%. MIMT all cap finally is starting to move up, is up 7.5%, which is again based on all cap. You can say CNX 500 mostly stocks. MI25, which has been slow, is up 6.6%, still a bit below the small cap move. NNF 10 is up 5.8%, still slightly better than Nifty Next 50, has come back very strongly in the last 3 months. MI Evergreen, which is CNX 200 based stocks along with Gold Hedge, is up 5.4%, doing quite well. MIATH2 and MIATH are up 5.2 and 4.6%, both chasing all time highs. My India top 10, which is a Nifty 50 strategy, up 4.6%, doing much better this month now and catching up. And NG 50/50, which is a strategy of Nifty and gold, are not performing this month because gold has been down while Nifty has been up, so stable there. But over the year, Nifty, even this strategy, free strategy, has done almost 15-16% here. So overall, I think a very good month. I think most strategies have done really well. Uh, what I want to stress here is that a lot of folks, I shouldn't say a lot of folks, but some folks are trying to move in and out of strategies, trying to create more timing. But I think unless you are really good at intuitively trying to time when to get out, when to get in, I would not suggest this for most people. The idea of weekend investing in general has been that you not be bothered about the market. Please focus on your professional careers or whatever else that you may be doing, and just spend 2 minutes rebalancing your strategies on a weekly or monthly basis, and you should be able to get over a longer period of time, over entire market cycles, returns which are beating inflation, returns which are beating benchmarks, hopefully. So that is the whole idea, that we are not competing with a strategy which may be totally discretionary in nature, or leveraged in nature, or uh, basically we are just competing with inflation and benchmarks. That is all that I can say, is that that is our attempt. We ourselves do not have much say in terms of how a strategy will perform. I cannot forecast, I cannot predict, because these are all structured strategies following a specific path that we set when we started them off. And we don't do any curve fitting, we don't tinker around with the algorithms that are in place. Sometimes we do really well, sometimes we don't do so well. And that is all part and parcel of this entire non-discretionary way of investing. I'll go through some sectoral trends also to give some ideas of where sectors are going. You may use it in your discretionary investing if you are doing so. So commodities is looking good. It is sort of has been flat since mid of 21, but I think it is getting close to a point where it may start to go up. Real estate has done really well in the last month and a half. It was in a flaggy type of correction from the beginning, or from this third quarter of 21. It has spent a good 9 months in this correction, and now it has started to go up. I have no doubt that this will go to a new high. Nifty metals is also similar to commodities, which it has been languishing, and I think it will take more time for this consolidation to happen. Autos is my favorite, currently the favorite chart. It has really done very well, taking out all times high and going up very strongly. I think many of the auto stocks that have been in our portfolios, whether it is TVS, Mahindra, Maruti, I think Eicher also in some of them, and in fact the auto components, whether it was CIE Auto, or whether it was JBMA or TI India, these stocks have really done well in many of the portfolios. FMCG has done really well. I think the charts are, despite all the high valuations of most FMCG companies, I think they continue to do extremely well. Uh, we've had ITC and all these stocks in our portfolio for a long period of time now, and they have contributed. I think Tata Consumer is there. I think Britannia has been there in some strategy. Public sector enterprise stocks have done very well. You can see that the great rounding up pattern has happened in the last 4 or 5 years, sort of cup and handle also, and doing well. And many of the defense and engineering and capital goods related stocks have done well. So we've had Masdog doing 250% gain. We've had railway stocks doing really well. We've had Bharat Electronics doing very well. Engineers India is there. I can rattle off so many names from this group also. Energy stocks have been down and out since 2022. I think there is more consolidation that may be needed, and still a setup is required. Pharma is another sector which is looking very promising. Recently, we've started adding pharma stocks in some strategies. We've had Aurobindo Pharma come in. We've had, I think, uh, one more stock that I'm forgetting the name. So pharma has started to come in. I think these rally looks reasonably stable and should be able to go to new high. Pharma has had a very long period of non-performance since 2015, and that may still, have some more time, but it should take off. IT, I don't think is taking off so easily now. It needs more consolidation. Will stay there. In sectoral ranking, you can see real estate has done the best in this last 1 month, 9.4% up. Pharma, see, very, very close to real estate. So pharma is really doing well. One must look at, yeah, Netco Pharma is the stock that I was thinking about. And autos is on the third position at 6.8% this month. Public sector enterprise stocks, then consumption stocks, infra stocks, everything has gone up. In fact, banking stocks are the least gainers, and a lot of banks, whether it was UCO Bank or Union Bank or even uh, all these other public sector banks, have actually moved out of many of our portfolios. And some of the key banks, HDFC Bank, or large movers within private banks, IndusInd Bank, they are the ones which have moved into some of the strategies. So very good picture from a particular sector performance. You can see here that real estate has remained number one over 1, 3, and 6 months. Really good. Pharma, you can see, is coming back very strongly. You can see when the table is turning from pink to green, from longer time period to shorter time periods, it means that it is rising up in the ranks. So this is just a sort of a way to depict and visualize what is moving up, what is moving down. PSU banks, which were up on a 9 or 12 month basis, have really slipped very, very recently. Gold is not doing so well very recently. Commodity is not doing so well. IT is not doing so well. Banks have overall have slipped. Consumption stocks, infra, PSC, autos, these have moved up dramatically in the last 1 month. Spotlight this month is on MI35. This strategy has really done well. It is a very well diversified strategy. 35 stocks of small caps from small cap 250 index. So 250 small cap index has been broken down, and we picked the relatively best performing 35 stocks, and that has gone into this portfolio. This portfolio, since it went live on small case, has clocked 41% since 21. And overall, whether I see it from 1 month, 3 months, 6 months, 1 year, 2 year, or FY24 perspective, it has done extremely well. Over 2 year period, it has clocked almost 48% on that. And we are running a campaign for today and tomorrow for this. So if you wish to use the link in the description, I'll put the description link, and we can go to that and use that if you like. Now let's look at the comments that are coming into the. You can drop your comments in the comment box, and we will take your comments. Sandeep Ghagare says your small case is rock. Thank you very much. Invested in MI top 10, NNF10, and Evergreen, total more than so many lakhs. Should I deploy in lump sum for go for MI25? Don't need for 5 years. So Sandeep, thank you so much for being a weekend investor and having the faith to invest in multiple strategies. I think, given that you have substantial investments to make, I would recommend, if you try to segregate your strategies across different subsets. So top 10 is of course focused on Nifty. MI top NNF10 is focused on Nifty Next 50, and MI Evergreen is focused on CNX 200. So your focus towards mid and small caps is not there. So either I would suggest you can go for MI50, or you can go for MI20 and MI35 if you like. These are few strategies that I would say. MI25 is also good, but MI35 has been performing better than MI25, so that is something that you could look at. Next question is from Arshia. Arshia says, what is the best way to invest every month? Every month when I rebalance, I'm selling stock to rebalance, but buying the same one again while investing more. Hmm. So I think what you may be doing is you're investing more before you rebalance. In case you're doing that, you first rebalance and then invest more on the day after. Actually, when you rebalance, the processes at small case backend take a day to update your portfolio. So invest more on the day after the rebalance is done so that you are investing in the new set of stocks that are available to you in your portfolio. So I think that is the possibly the mistake that we are making by investing more on the day of the rebalance. So segregate these two activities so that rebalance is separate and invest more is separate. Uh, Next question is from Anil. Please address pyramiding strategy from investing strategy stock for aggressive investors. So, pyramiding, just for the sake of knowledge for others, is a way of investing where you pyramid up your winners. So, let's take a simple example. Let's say MI20 has 20 stocks with 5% allocation to each. Now, a week later, we find that 10 stocks have done well, 10 stocks have not done so well, or maybe there is some hierarchy. Top stock has done 20% up, bottom stock is down 5%. So if we want to do this, and I'm actually not recommending this, but if some advanced users want to make their own overlay of a strategy over this current strategy, what they could do is remove the weakness and invest that money into the highest gaining stocks. So gradually you will be, and if you keep doing this, let's say you've taken two out and put that money in the top two, then the next week you're taking two out from the bottom, putting the money in the top two, you will concentrate your portfolio and build up the allocation in the stocks that are doing well. And then of course your performance will become totally uncorrelated to the performance of the strategy because your allocation is different. And and and, and you will need to figure out ways of even exit strategies being more there be an additional layer of exit strategies, because the conventional exit strategies based on the conventional exposure. If some stock you have reached 20% exposure, you will not want to wait for that kind of a exit to happen. So it's a bit tricky. I don't recommend it, but if you can or if you want to pyramid up, I think maybe ATH or ATH2 may be a good strategy where you can try to concentrate from 10 stocks to 5 stocks and pyramid up that way. This is all I'll say on this subject for now. Sheetal says, MI25 subscriber, it has only 22 stocks. Can we add three more stocks in the same? So, by design, MI25 is a strategy which can have up to 25 stocks, not necessarily 25 stocks. When we started, we always have 25 stocks when we started the portfolio, or whenever it goes to cash, that is where 25 get allocated at 4% each. But what happens is over time some stocks will go up 60%, 100%, and they have more allocation now. So everything is not 4% anymore. Some stocks are 6%, some stocks maybe 8%. So whenever those stocks will get liquidated, you will have more stocks. But until such time, we are currently at 22 stocks and we don't have any cash in the portfolio. So we will continue with that until some stocks that have high performance, which have reached 6, 7, 8% encashes. And when that encashes, we will then have enough cash to bring two more new in. So that's how it will work. Don't worry about it. We don't have to be at 25. 22 is also fine. Dhruva has a question. What are the hottest sectors to buy and hold for another 6 months, which can show betterment in Q3 results? So I've gone through the sectoral ranking and the review with you. These are few of the sectors which are really doing well, and I hope that they continue to do well. Are pharma, real estate, autos. These are the sectors that are looking good to me today. Garvit says, please do take questions up this time, but we always take questions, Garvit. I mean, this entire exercise of this meet is to take questions. So don't worry, shoot your question. We'll try to answer. Rajat says, we missed on HDFC and Dr. Reddy's rally. Do we need to revisit, rebalance timing in top 10? So, Rajat, we will miss a lot of stocks that may rally from time to time. We will also miss a lot of stocks that drop and ruin Nifty from time to time. So don't worry about all this. We will not be able to perfectly catch each stock going up, catch bottoms, pick tops and exits. This is just not going to be possible. What we are trying to do is to have a protocol as to how we are investing, and that protocol, when studied over a decade, in the last decade, has done really well, and we hope that that protocol will, or that algorithm will continue to do well in years to come, because the basic uh, thought process that has gone into it, that stocks that continue to do well, the stocks that are doing well right now should continue with the momentum for some more time, and stocks that are doing worse right now will remain weak for some more time. This basic thesis is imbibed into the algorithm, and there is no perfect answer to it, but this is what will should create some alpha or outperformance over some period of time. Next question. Very nice message. It's not a question, but I want to share it with you. Mr. Vineet Bhatt is saying, I'm very grateful to you. Because of him, I'm standing in the stock market. So I hope that Weekend Investing has been able to assist you in your journey. And, we get a lot of messages where people are saying that, uh, you know, uh, they have been able to achieve either financial independence or a path towards it, because their mind is now free from the doubt that they will be able to do well in their investing. Even just today we were talking to one investor, and they were mentioning that they had two buckets, husband and wife, and the husband invested in discretionary investing on his own. The wife invested in a weekend investing strategy, and there was a time where her strategy was not doing well, but the husband was really doing well. But over a period of a year, she found out that he has burnt out all the money in his whatever investing or trading he was doing, but she is up now 20-25%. So the whole point of being patient, allowing the system to do its thing, and being totally at peace with your investing journey, I think that is really something that has come about in many of the testimonials there. So Sagar is saying, I wanted to have a discussion with your team members on some queries. What would be the best way to connect? So Sagar, email is the best way of support right now. You could ask your question here as well. In future, we are also trying to add more tools to the for immediate solutions to your queries. We've added some FAQs and answer banks to our portfolio. We will also toy with adding artificial intelligence to our website, if that may be able to help in getting immediate answers. So all this is in the process, but right now email remains the best way for communication of any query if you have. Next question is from Praveen Patil. He says, what specific factors or events do you believe contributed to the underperformance in all cap, MI, ATH2 and ATH2 small cases? So I think there are some periods of time when strategies which are absolute momentum in nature. So absolute momentum are strategies which go to cash. Relative momentum strategies don't go to cash. And what happens is that when markets go into a deep dive, that is when the absolute momentum strategies go to cash, and then there is a lag in coming back to allocation. That has not happened this time. This what has happened this time is that they were going to partial cash and only rotating back into some stocks, and those stocks not having that momentum to carry on. So we've been into this 1 year, 1.5 year of grind period that has not worked well for absolute momentum strategies. Whereas in rotational momentum strategies, this period has worked well because they were always chasing the best performing stocks at that point, even though they were not coming off a rock bottom kind of a place. So I think that has contributed to MI20, MI35, MI Evergreen, and MI, which is our fourth rotational strategy to do well and performing stock.
My
MI
35.
35. You're right. Thank you. These are the four strategies that have done well in rotational momentum style. Absolute momentum style has done well in the past. It is no. I'm not saying that they are not doing well. Yes, in the last 1.5 year period, they may not have performed as well as we expected. So this is my sort of thought process why they have not done well. But this month they are catching up and they should do well. Like MIATH2, if I take that example, in the last 1 year it has really done well. Yes, in the first 1 year when it started, it did not do so well, but in the last 1 year it has really done well and beaten its benchmark. So I hope that this will cover up in due course of time. And let me also say that yes, in isolation, some periods of 1 year, 2 years may happen that the performance is not there. But over a period of a entire stock market cycle, 3, 4, 5 year period, I'm seeing that there is no strategy which is left. Has left the user wanting for returns. So I hope that will continue. But of course, I have no magic wand, and we are hoping that all will perform as per their expectation. Mohit Sinha has a question. Is it a good time for lump sum investing considering breakout, or should hold considering all time high? So, good question, Mohit. My own thesis has always been that what is happening today may just get rubbish tomorrow. We may be at all time high today, but something happening overseas or some attack happening in Ukraine or something happening anywhere else can derail the markets tomorrow. So that fear of uncertainty will always remain. The unknown in the market always remains. So my suggestion and I consider myself to be a very conservative person. I'm not aggressive in terms of approaching the markets. A lot of people think that momentum investor is that momentum word somehow has a connotation that you are doing leverage, or you're doing some very fast churning, or you are some fast action based investor, or you're doing three triple digit returns. Those kind of things come to mind when person thinks of momentum. But I think we are doing very conservative approach towards momentum investing, and slow and steady trying to protect capital in the first place, and the aim is only to beat inflation and benchmark. So from my perspective, you want to go slowly, spread your money out over a as long a period as you think is possible. Spread it out, maybe a year, maybe 6 months, maybe a year and a half. Lump sum is something that is extremely risky. If you are willing to take that risk at any point of time, that is a call that you need to take. But at any point of time when markets are down 10, 15, 20%, if they are, these are the sort of safer points where I think that lump sum investing or invest more works the best with the least risk at that point. So I hope some part of your question may have got answered. Let's take another question. Sagar says, "MI20 is rocking. If we are following a simple exit strategy, what would be better?" This is a part of a question. 20 EMA break on daily chart and 20 week break on weekly chart on closing basis. So I don't think there's any of the exit strategy, whether you use a super trend, whether you use a moving average, whether you use RSI, whether you use a percentage drop from the top, whether you use a ranking rotational method, everything works in its own context. So, whether you're looking at a 20-day EMA or a 20-week moving average, it will have to depend upon the design of the strategy, how quickly you are churning the strategy also has an implication. I mean, I could design a strategy where I am checking a rebalance on a daily basis and throwing out stocks every third day. But my churn will be so high that the cost of churn itself will blow out the results. So you need to have that balance of things into perspective. And what are you expecting from your strategy? If you are expecting that I don't want any deep drawdowns or even mediocre drawdowns in any stock. I don't want any stocks to go below more than 10% drawdown. You could add a moving average and a condition that no stock should drop below 10%, something like that. So it is all dependent upon how you design a strategy. There is no right or wrong answer to this.
Rog, let's take this question when there are a bunch of questions from Praveen, so this might also help other investors, I
I just
believe.
took a question from Praveen. Which one?
There are three more. So let me just quickly summarize the questions before you take them. So
Okay. Okay.
he says, are there any structural changes, the dynamic changes in the markets? So how do you plan to adapt momentum strategy to better align with market conditions, and what measures are being taken to address the underperformance and improve the portfolio based on the changes in the market structure or dynamics? So
I don't think when we are looking at on a weekly or monthly basis, we have any major change in any market structure as such. I don't think there is any change in market structure. So while some people are keen to fine tune the strategies every 3 months, every 6 months, every 1 year, we don't believe in that. I think the thesis that we are working on works very well in today's market, like it did 10 years back or 15 years back. I think that thesis is not changing. The churn has not changed in the last 5, 6, 7 years that we've been. Otherwise, we would have noticed that in the churn also, and the average returns or the average drawdowns also. That has not changed at all.
And it is also important to stick or take a long-term perspective, because based on a recent mutual fund report, we understood that people are staying only for 2 years, less than 2 years across any fund category. So
I would tend to agree there that to expect that every strategy will outperform every year or every season is expecting a bit too much maybe. There are times when strategies underperform, then there are times when strategies overperform like crazy. We've had hundreds of percent of extra returns in several of the strategies in the last 3 years. We've had a debacle in MIATH 2 years back, but it has come back very strongly this year. So this happens. I mean, MI20 did extremely well in the first 9 months, then it not did not do well so well in the next 3 months, and now it is again at the top of the charts. So these are sort of natural progression, and we really don't have control over that. So you need to have a mindset that a non-discretionary way of investing has its own pitfalls. I'm not saying non-discretionary is the best of the world and nothing can beat it. I'm not making that claim. Discretionary investors who are garnering tens and 20 thousands of crores in the market are not even able to beat benchmarks over the last 2 years. So I am not really comparing with anybody, but this is something that I really cannot comment too much more on now. Next question is from Bhavani. He says, what are the ways of tracking error for following MI20 given that I rebalance the small case as and when rebalance update comes? So let me share with you how the small case platform tracks uh, the performance. It takes the open, high, low, close average of the day after rebalance. So if the rebalance has come to you on the weekend, then on Monday the small case algorithm will take open, high, low, close and take that average as your buy price, and the same for the stocks that you've sold, and use that in the performance. That's how the small case platform does. And over a period of time, we have seen for most users who are able to comply the rebalances within time, that there is in averaging out of, some days may happen that your price may be a bit different from this average, but then there will be other days when the average is, poorer versus your price. So overall, I don't think there is any difference in terms of what may be a tracking error. Marginal errors may be there, but then marginal errors, we are not even encompassing dividends, for instance, in these performances. We are not adding liquidity returns in these performances. So marginal errors can be attributed down. Again, you need to keep your expense ratio low. That is a major cost for any strategy. So on the small case page, there is a recommendation of what size of portfolio you should ideally have. So ideally try to meet that size so that cost does not pinch your returns there, which some people have made the mistake of doing that. Saurabh says how to identify chart patterns and draw trend lines, where to learn. So many books are there. A lot of online material is there. I think on Twitter, a lot of folks are teaching this. So if you will look around, you will find, so many resources that will cater to you. But I think uh, there are some really good books for this. Dr. Luthra, who's one of our old-time weekend investors, recently presented me a book from Maggie. I'm forgetting the other name. That is supposed to be the Bible of technical analysis. I've started to read that. That is really nice, and I'll try to come up with more books and share with you. But if you just tweet tagging me on Twitter, I'm sure other people will help you on this one. Pankaj will not be able to take specific stocks because that is not the current purpose of this meet. But I'll take queries in general here. Garvit says your comments on foreign funds coming to India. Also, you had made a video on when interest rates falls, market also fall in the past. Your thoughts, please. So, Garvit, these are while macro sort of events and they have implications. Our investing is not based on these trends. So from that perspective, we don't give too much of importance to them also. But as I said in the presentation, I think as dollar index starts to fall, yeah, I'm expecting that to happen in H2 of this year. So that is the time, I think, when there may be more flows towards India. And interest rates is a mixed bag. I think uh, depends upon how much of is the fall of interest rates already baked into the markets. For instance, this time it has been very unusual that real estate stocks and real estate on ground also has not budged despite the rally in hike in interest rates in India. So I think that has been a very unique phenomena in the last 1 year. So it is not necessary that when interest rates start to fall, markets will fall. But yes, there have been some correlations around that. So maybe we'll take this up in some DB and delve more on this. Sudhanshu Paliwal says fundamentals should be seen in momentum investing. If yes, should it be seen deeply or a little bit? Again, it depends on how you're going to design your momentum investing strategy. Yes, there are practitioners who do two levels of sorting. So first, they will filter out stocks based on fundamentals, and then on that filtered list, let's say they started with 500 and they're down to 150 basis, whatever ratios or fundamental conditions that they may have put. Out of that 150, they will then try to do a momentum ranking and use that is also a good way to do it. My personal sort of thought on this is that the core thesis of momentum is that the Bhav Bhagwan Che principle, the BBC principle, that stocks will move before fundamentals are able to showcase that why the stock has moved. If a fundamental result is showing extremely good result, the stock has already moved, or at least a big chunk of the move has already happened. So why not? Why wait for that stock to come into the fundamental filter first, after 3-6 months of stock of prices having gone up, and earnings having improved, and then it comes into my filter, and then I buy it. I would rather buy it, much ahead if the prices are already showcasing that strength in the stock. And I would rather get out much before, that 3 month. Let's say, you know, uh, you have some deterioration in fundamentals, and it takes time for the fundamental filter to recognize that fundamentals have gone bad. But stock has already dropped. Stock may just drop in 1 week itself. So again, depending upon how you will mix it, but that's how that's one way some people are doing it. Another way some people will do it is keep momentum investing strictly non-discretionary, price thesis based, and that then have another silo in your investing, totally separate, and you practice fundamental investing in that, and then compare over time, compare over three years. Hey, did I do well in this one, or did I do well in this one? If I'm really good at fundamental investing, why should I even do momentum investing? Let me move all my eggs here. Or if it is the other way around, that momentum investing is not giving me any sleepless nights and it is performing as I was expecting it, I'll move everything here. It could happen both ways. Sai says, why don't you have micro cap strategy when you can manage potential drawdowns as you are minimizing in? So micro cap strategy has a issue. See, one thing you need to understand is that as a retail investor has the maximum scope of liquidity and freedom. Whichever stocks they want to buy and sell, they can do it, because their buying and selling is not going to disturb the market. As soon as that size grows, there's a classical case study for a small cap manager a few years back who became so large. From 100 to 100 crores of PMS, they went on to become like 1500 to 1000 crores of PMS, and investing in 20 stocks. So every acquisition for them became 100 crore buying or 100 crore selling. Even in a good small cap stock, a 100 crore investment cannot be easily done, or an exit is not possible easily. So once they moved in 100 crores into a small cap stock, they were managing 7% of the company, 9% of the company. And once that news is out there in the public domain that XYZ is holding 9% in the company, the market will not let you out. You are now the elephant in the room. So the same happens in micro cap also. As soon as 500 users of weekend investing will go and invest 5 lakhs each, it will become uninvestable, because each buy order will become 25 crores worth. Each sell order will become that kind of money, and the stock will not be able to handle it. So that is the reason segment. But yes, if you can do it on your own, that's the best way of doing it. Sheetal says, what is the overlap in MI25 and MI35? There is not much overlap, but some, of course, because both are pandering to small caps. But what you can do is you can send us a mail. We will do a comparative and send you how many stocks are actually there which are overlapping. I don't recall that at the top of my head right now. There are a lot of stock specific queries, but I will not be able to take those, so I'm skipping those. There is query about Pranam scheme. I'm sorry, I'm not getting into that. I don't have enough qualification to specify about how fundamentally is going to impact things. There are queries on data. So data, uh, every data point is available on the Weekend Investing Hub. We will provide the link on the description also. But if you can go to the Weekend Investing Hub and take it from Weekend Investing website also. We have it. All the data for every strategy is available there on a monthly, 3 monthly, 6 monthly, 1 year, 2 year, 5 year, long-term basis. Subham says, please make a fresh video on EMA tool for active users. So Parikshit, please note this. We will do this in one of the DBs. Not an issue at all.
Sure. Yeah.
Uh, Minimum SIP amount is a major confusion for a lot of people, because minimum investment amount small case platform gives out there, which is usually changing as per the composition of the portfolio. So if any stock will come in, which is, let's say 4,000 rupees, and you need to have 20 stocks, so immediately 80,000 will become the minimum investment. And if the top stock is only 1,000 rupees, then the minimum investment will become 20,000. But SIP is something, we have a FAQ on minimum SIP amount. So drop us a mail and we will send that FAQ to you, or you can just search through the FAQ. There is a calculation based on the largest stock. So that times 2 plus 1,000 rupees is the formula, if I'm not wrong. But just drop us a mail or search the fact. Garvit has another one. Why can't we have a common day for rebalance for all strategies? Why not a weekly rebalance? So Garvit, some strategies are designed on a monthly rebalance basis. That's how the design of that strategy is, that we want to give it a month's time for that stock to do its thing. Whereas the weekly strategies could be more fast moving. So if you've noticed, the monthly strategies are more larger cap in nature, NNFT, evergreen, because there you are not expecting very volatile movements in the stocks. Whereas in mid and small cap oriented, or stocks or strategies that are chasing all time high, etc., there they need a very timely exit within a week, sometimes even before that. But 1 week is the minimum that we want there. So that is why. And also, a lot of users don't want a weekly rebalance. They say that we want only a monthly 2 minute to be done. We don't want to be bothered on a weekly basis. So that's why we have different kinds of strategies.
How many more queries you would like to take, Alok? Quite a
So we
few
are
here.
at the end of time, but let me just quickly go through and see if I've. All cap and ATH I've already taken up. Overlap strategies. How much overlap? Please send us a mail. We'll give you specific how much overlap is there.
Also, to all of you who are here with us, we also do a session alternate Fridays, or one Friday each month, taking up your queries. So yeah, you can also take that route.
NG 5050 is not closed. So the small case microsite, weekendinvesting.smallcase.com, you will find that NG 5050 is there. There's a question on some mutual fund. I'm sorry, I'll not take that. This query will take. Harshad says, nowadays small case forces us to renew automatically. So no more while loyalty discount or while auto debit from will be 10 to. So this is a platform decision that they have taken, that they will allow only auto renewals. But having said that, there will be no case where, if you did not want to renew, if you, let's say, you can, first of all, you can always unsubscribe whenever you want. So there is no compulsion that you have to auto renew. Second, if you do auto renew, on the day of auto renewal, if you find out that you've been auto renewed but you did not want to auto renew, please drop us an email. We will close that and unsubscribe you and refund your amount. Not an issue at all. So just make sure that you let us know within 24 hours of that auto renewal if you did not want to auto renew, and there'll be no questions asked on that. So we'll see about the auto renewal. If it's a platform decision, I also cannot help that from that. And since they started auto renewal till that date, whoever had had come in and is renewing each time will continue to get that wild discount on the automatic. So no worries on that front also for I think more than 95-97% of people who have come in there. So that part is well taken care of. I don't think you anybody needs to be worried about what happens if I pay and I don't want it. With weekend investing, we will make sure that you get your subscriptions worth, or we refund your money. Not an issue at all. So Chandan says, why don't you teach your strategy for learning so that we can learn and invest by ourselves? So we have two courses with full strategy now available. You can go and attend those courses. One of the courses is already listed on the weekendinvesting.com site. If you go through all the various videos that we've done over the years, many strategies have been discussed and offered on a platter. So essentially, really, you cannot say that I have not shared strategies. But if you are a keen learner, you will find several strategies that are already out there in public domain. And always remember, it is not the strategy that is making money; it is the discipline and the your approach. Strategy is only 10-20% part of the game. Your position sizing, discipline to execute, discipline to weather the drawdown. Only that part is really creating the winning part of it. Vineet says, following absolute momentum strategy, if momentum in gold increases and the same is crossing momentum in Nifty, can we shift our investment from? Yeah, so you could use a dual momentum strategy, shift from gold to equity and equity to gold. Not so easy to do, but yes, you can do that. Or you can create a dual momentum strategy where you go 75-25. So you could be 75-25 equity gold, or you could be 75-25 gold equity. That can also be done as you switch. How much would be the exposure to mid and small caps? I'm subscriber to MI20 is 35% fine. Yes, this is fine. You could go to even 50% if you want. Ajay Kumar says, thank you for great work done by this. Thank you, Ajay. Rajiv says, why stocks like JBMA has not been included in MI All Cap, where it has been one of the best performing last 6 months. So there are filters for each strategy, volume filters for each strategy. Again, depending upon whether there was a chance, there was a seat available for a new stock to come in. There are a lot of factors. JBMA is there in many other strategies, but maybe it is not there in MI All Cap. Every winner cannot come into every strategy. Like right now, there are 400 winners in the market. You can't have them all. So yeah, I mean, this it would have been nice if JBMA had come to all cap also, but it isn't there. Rajendra says, would you consider silver in your portfolio besides gold? No, we will not be considering silver. The historical performance of silver is nowhere near gold, so we will not be taking up silver. Sai says need an update on stairs. So please, either you can join the stairs Telegram channel, or just drop in a mail. We'll can get you connected. Not an issue. Uh, where can we see sector-wise ranking and performance? So we share this table from time to time. What we will do is in the next upgrade, whenever we do of our website or the weekend investing hub, we will try to include it there also. So maybe on a weekly basis, we can try to update that. Um, this question is from Umesh. Why is 25-minute, 75-minute, 125-minute time frame is helpful? I am not sure what is this question. I'm not aware of this, please. So Dilip, there is a recommended portfolio size. Uh, what I can say is don't go too much beyond it. If the recommendation is there, maybe 5 to 15 lakhs is fine, but don't put 50 lakhs into that. So that is the kind of recommendation is there. Medhavi says, what is the outlook for gold prices? Will it rise or stagnate? I think gold has done really well in the last few years. And I think gold remains a extremely robust chart. It is currently resting for the last couple of months, but I think by the end of this coming quarter, we should see some good fireworks there. That is my biased hope. Uh, yeah. How do we plan exit strategy for stocks which have been laggards for decades and of late keeping making new highs but can collapse and stay down? So whatever is the exit plan for any stock will apply to them also. There is no specific exit strategy for any particular stock as such. Um, it's a lot of repeat questions. I may miss some questions, so pardon me for that. But I'm just trying to go and see some unique questions that are there. Uh, Am I top 10? Don't you think it needs increase in number of stocks or change in rebalance timing? So no, it has underperformed in the last year. I agree to that, but I don't think that will define how the structure of it. It is a rigorously tested portfolio, and it needs to be given more time. In fact, this month is the sort of the first month it is really showing promise. So I'll wait more on that and not tinker around with that algorithm. Uh, My question got skimmed, says Shivans. Okay, please repeat again. Okay, I'll take your question. How to manage concentration risk? Should we start cutting down on a stock which has risen to 15%? But isn't this opposite? So there is a limit to which we will take it in any portfolio. So if it's a 10 stock portfolio, we will not let it go beyond 15%. If it's a 25-30 stock portfolio, we will not let it go beyond 15%. In some strategy, I think in MIATH and ATH2, we have allowed it to go up to 20% also. But that's about sort of the limits to which we go. Beyond that, we will cut it down to the usual level. And in some strategies like NNF10, Top 10, and Evergreen, it automatically gets rebalanced every rebalance to the standard allocation. Uh, Praveen Patil has another question. Yes, I answered this. It remains the same. Uh, Is there any plan to automate strategies like stairs? No, it is not planned to automate strategies because, as per our license regulations, we cannot get into a way where we are being part of the transaction. In small case, it is different where we put up the portfolio and then it is between you and small case how you will execute it, but we cannot be a part of the execution. And also, none of these automated strategy platforms are broker neutral. So, some have Zerodha and couple of other strategies, couple of other brokers. Some have some others, and they are themselves not stable. And concentration risk happens when you have, a signal going on many of these platforms. The Nifty itself, if 100 crores is going to come in a flash, then there will be more slippages also. So it is best that there be a manual trade override on this. And working professionals, if your work does not allow this kind of activity to be done, I would not actually do it because it will also keep you distracted from your work. Uh, Vishruth Nair says, rather than having multiple strategies to confuse which one to invest, it is better to have 2-3 strategies which will cater to all market conditions. So we did start with few strategies, but there was always special niches that were demanded, like all-time high, like NNF10, Nifty top 10, or like specific small caps only strategy. That's why so many strategies have come around. But yes, I mean, there is very little overlap between all of them. But yeah, small caps have two, mid and small caps have two, and the difference in between them is the absolute and the rotational also. So if you will see, none of them are actually, sort of a mirror of anything else, but there are subtle differences. Yes. If you need help in, selecting the we could do that. Kotak Mahindra Bank chart. No, I'll not get into that. What is stairs, Saurabh? Please drop us a mail. We'll connect you with the stairs support team. So I think I've gone through most of them. I may have missed some. I'm sorry if I missed some. I've already exceeded the time by 10 minutes. So thank you so much for all of you who have stayed on, and this has
I
been
think
good.
your voice is
April,
getting
May,
stuck.
June quarter has done comments about our service, our products, our YouTube educational videos. We are doing a lot of work towards that also now. The whole idea is that we create a community and we share a lot of information and knowledge about this. So this is something that we are continuously working on, and your feedback will really help us in doing it the best way we can, which will help you as well as promote and grow weekend investing also. So thank you so much. Have a good day. Have a great weekend, and I'll see you next month. Bye.
Are you in the live session? No?